good morning. Gotta find the music though. Shoot. Can never. What am I doing? There it is. All right, good morning. Comment televoo. How are you? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. Yeah. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Trading is risky. Oh, yeah. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Yeah, so you actually have to see it. Trading is not appropriate for everyone. Your past performance does not predict future results. That's what the NFA wants you to say. Hey, my name is Wayne. I'm a retired supermodel, turned venture capitalist, turned financial market trader. Yeah. So we got CPI today. Who cares? Who cares about CPI? Anybody? No, I guess we can talk about that later. What's going on in the markets right now? Nothing. Cool. So I guess we just got to wait for the news. Powell cares. No, he doesn't. Oh, what? No, he doesn't. So I'll save that as a gem. I already talked about it at QuantBox today. So if you're a QuantBoxer, you already know. If not, make sure you subscribe to the QuantBox YouTube channel so at least you get it for free. He mentioned it several times. He mentioned what? Ha ha ha. We'll get there, mate. We'll get there. Yeah. I know it's kind of a trick question, but it is an aha moment where you're like, oh, that also makes sense. So he doesn't care. Nobody actually cares. But yeah, we can talk about it. Anyways, it's a little of a trick, but yes. So anyways, I guess we'll listen to CPI. We'll watch the market. Wow. Right? Yeah, the press conference. Yeah. Yeah. So anyways, ask questions. Let me know how I can help. I am a servant. I am here to serve you. I work for you. I want you to succeed. In return, I ask you to click the thumbs up button and leave a comment on the recording. Cool. That's it. There are many resources that have been made for you. One of them is QuantBox that automates your macroeconomic research. So you can log in and go, oh, look, nothing's happening. I should probably be super ridiculously conservative at the moment. And you're like, well, Wayne, how do you get to that? Oh, well, we track in real time. Loading. We track in real time gold, the 10-year T-note, Japanese yen futures, the dollar index, VIX, and the S&P 500. We look at them all, compare and contrast, put them together in a basket, and say, do nothing, do nothing, do nothing. And an amateur is probably going to go find something to do. And you will probably find something if you're that amateur. And you will probably take a shot and find out, oh, that's weird, nothing happened. The other thing is we're about to get volatility, and I'm telling you, it's meaningless. And we'll talk about that in a second. So anyways, if you like all these pretty colors, they're more than just a pretty face. They help you make intelligent decisions. Cool. It's QuantBox.com. Okay, if you go to Amazon.com, Amazon.com, and you type in, where's my mouse? Strategic and tactical Forex trading. Oh, wow, I didn't even spell it right. Did I not spell it right? Strategic and tactual. Wow, tactical. Okay, I wrote a book. It's considered one of the worst books ever written, which is kind of cool. Number one. Yeah, number one. Who's the most recent? Let's do the ratings. Top reviews, most recent. Men in Action. June 16th. Thank you, Men in Action. Appreciate that. So if you could leave a feedback, that'd be great. Many of you have this. Yeah, there's Meta. That's such a great picture. Absolutely, totally awesome. Look at that. I like the crown too. And, well, and the tortoiseshell glasses. But I loved it, right? You can be queen bee, and I'll rule, I'll rule, I'll rule, I'll rule. Yeah, anyways. So anyways, yeah, check that out. Very cool. Tradersway.com is a broker you should choose. I recommend them. They recommend me. Very cool. You should check them out. Trustworthy and ethical, in my humble opinion. And they earn my respect in the real world market through their real world behavior, not through some banner ad. Go check them out. There's no special link. I don't earn a commission. You don't have to like do something. You don't have to tell them I sent you, whatever. Do your own due diligence. Go check them out. TradePlans.ai is amazing. I did build this, Trade Plans. TradePlans.ai. Really amazing. You fill out this form. So you're like, Wayne, I want to trade the NASDAQ. I want to sell the NASDAQ, and you put in your price, your stop, your entry. You put in an image of your trade plan. So you do a screenshot of your chart, pop it up there, boom. You have feedback, a second opinion on your trade in less than 3 seconds. It's private. It's not sent to anybody else. Nobody else sees the feedback. In fact, it's not even posted on the website. You were sent an email. That's it. Like, boom. There it is. So it's like, Wayne, it's like asking me, Wayne, what do you think about my trading idea on NASDAQ? And I'll tell you on 3 different time frames, short term, medium term, and long term. And by the way, it's free. Cool. And then QuantBox, you already saw, another amazing tool, just absolutely amazing. Okay. Like, for example, how would you like to know how all the money is positioned in the market? Retail sentiment and institutional sentiment. This is where all the money is. Bitcoin is 50-50. Is there any wonder that it's moving sideways? Look at the Japanese stock market. Institutional investors are heavily long. South Africa, your rand is heavily short. Okay? The yield on the 10-year T-note, heavily short by institutional investors, 71% short, and I would benefit from such a move. I would love for the 10-year T-note to go back down to 3.5. I would benefit. So please. So anyways, that's how the quant box do. Now let's talk about inflation. Why do I say it's irrelevant? Well, first of all, it will create volatility. So for all you retail traders that like volatility, you're like, oh man, I'm going to make 30 pips on this move. And then sweet, you're going to get some volatility. Awesome. Cool. But on the long term, why does it not matter? Does anyone want to take a guess why today is irrelevant? Well, to answer that question, you have to know what relevant is. Yeah. Ooh. Well, fundamental analysis is the study of the trend in economic data with the purpose of understanding central banking policy towards those trends. Does the Fed care about inflation? Yes. Does the Fed use CPI for inflation measures? No, they actually use PCE, but that's not what I'm getting to. It doesn't matter. Do they care about inflation? Yes. Is inflation data coming out today? Yes. Does the Fed care about today's inflation number? No. Well, I don't get it, Wayne. What does that? How does that add up? There's 2 CPI reports before the next Fed meeting. Wait, what? The Fed meeting is September 20th. Today is August 10th, I guess. 11th? I don't know what the date is. 10th? Today is August 10th. There's another CPI September 15th-ish. And then the Fed meeting's on the 20th. So on the 20th of September, they're going to talk about CPI that came out on the 15th of September, 5 days earlier. Nobody's going to talk about August CPI. It will already be old data. So if they don't talk about it, then it don't exist. Oh. But I think we're also going to get a mixed bag. We're going to have disinflationary pressures and inflationary pressures hitting. So you're going to get core and headline divergence over the next 2 months. Oh, stop it, Wayne. That's too much. That's too much. Okay, so if you don't count the things that you care most about, inflation is improving. But if you count the things that you care most about, then inflation is real and returning. Richard says, can we do a deviation analysis to guess the upside or downside PCI number? Why would it even be relevant? So let's say you can make a quick 50 pips, Richard. Let's say if you can do that and you can make a great 50 pips. How much money is that? Well, it depends on your lot size. Well, if you trade the way I teach you, 50 pips is irrelevant. That's like for a toddler. But if you want to make it like, you want to make some FU money, well, then you have to jack up your risk, trade the volatility, and make a lot of money quick. It's like one of the dumbest ideas in trading and investing. Now, I'm not saying it's you. I like the idea, but like the purpose of it, Richard, is like, why? Why would you even care? Well, if you get it right, you can place a lot of money on it and make some money quick. It's destructive. You see what I mean? It's destructive. The thought process is dangerous. So, yeah, you could do it, but I wouldn't want to. So what I'm trying to say is let's put today's volatility event into context of the, I don't know, the business cycle. Well, what's likely to happen today in a mixed market is mixed. Also, the data itself is likely to be mixed and irrelevant on the long run because the Fed won't even use it. They'll use the next CPI. But meanwhile, you'll have a divergence between core and headline because we have deflation in China. So the crap we buy from China is going to be cheaper. So prices are falling. That's disinflationary. But now you got to pay more for fuel to put gas in the tank of your vehicle. So we have very real disinflationary pressures. We have very real inflationary pressures. In a time of year you shouldn't be trading, in market conditions that are mixed to zero at best, for a news event that nobody cares about, on a trading strategy based on volatility, in which professional long-term institutional investors try to avoid volatility. So we're left with retail garbage numbers for a trading strategy based on the premise of get rich quick that ultimately mathematically doesn't work and falls into the cliche of blown up trade accounts. Oh, wow, did I hit that hard? Oh, well, look, I'm on my 9th Nespresso already this morning, and I've had 2 full cans of energy drinks. So, yeah, too hard. So anyways, yeah, Luis, so yeah, you'll see that we're facing like 3.5 and 4. Yeah, 3.5 and 4. We're on our way. But what is, what we really care about is the rate of change from last month, but into the rate of change of next month. So I think what we're going to really care about, everybody, is that the September CPI, which will come out right before the Fed meeting, is going to be quote unquote bad. So let's break it down. Where does inflation come from? Funny money. Okay, well, the funny money has not been removed, so we still have funny money. Okay, what about demand, the demand side of the equation? Demand has to be up to push prices up. If you're like the UK, low demand and high prices, you're in really serious problem territory, right? But let's just say there's a relationship between demand and prices going up. All right, Americans have jobs. Americans have high wages. Americans spend their money. Americans don't save their money at all. They have negative savings, but they spend all their money and they're still willing to buy a bunch of stuff on their credit cards. All of this is factual. I've already done this on the Q3 Outlook. If you paid the lousy $10, then you're smarter than most. And we already know all this to be fact. Okay? Great. So what does that mean? Inflation's not going to be down. Wages are up, spending's up, credit is up. Okay? In fact, we're spending more money than we have, and we have free money still in the system. So anyways, inflation's not going to be dramatically better. And the risk, and the very, 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 very real risk, is that inflation's going to go back up despite everything that the Fed did, because I'm pretty sure everything the Fed did was mostly irrelevant. What they did was normalize interest rates, and we needed to do that, and thank God they did it. But that was a problem that's been lurking for a very long time, and finally, a crisis force the Fed to do what needed to be done anyways. We were worried that if the Fed raised interest rates to 3%, that would crash the economy. Well, we've raised it to almost 6% and the economy still hasn't crashed. So we've been afraid of nothing this whole time. All right, so anyways, so now we're here. The real risk is that at some point, this energy where we went from $65 to 70 to 75 to 80 to 85, we're on our way to 100. And so next month, we'll probably still have very high energy prices, translating eventually into very high gasoline prices, which will translate into real world inflation. And we'll have 2 months of inflation going up. And the narrative will be, oh my God, the market's wrong. Oh my God, the Fed isn't done. Oh my God, we're going to have to raise interest rates to 6%. We didn't have that priced in. Oh my God, we were wrong. Because remember, 83% of the market thinks I'm wrong, and I'm okay with that. They'll catch up. Okay? Okay. Okay. So anywho, we already know all this. It's already been covered in great detail, which is cool because you're not going to be shocked. So that's a lot of intel going into this report. I hope you appreciate it. Did you click the thumbs up button? Let me check. No. 66% of you haven't even clicked the thumbs up button. Really? Come on, dude. Seriously? All right. So anyways, mixed bag. Be careful. Let me change the template on this, obviously. I'll just throw one randomly down. Okay, cool. Cool. So we've almost hit the target for gold. This is, I think, the third week of this trade. And maybe there's one more move. We're in the zone here of maybe. There's the roll reversal. There's the 21. There's the daily pivot. And there's the weekly target. And below that, the monthly target. Cool, right? Does anyone want to know where to get the information? Mr. Ed. Right from the horse's mouth. See this energy? Down 17%. This is going to start going up. And it doesn't matter that the Fed has raised interest rates. Remember, 83% of the market says the Fed is done raising interest rates, which is strange because the Fed told us there's one more. 83% of the market ignores exactly what the Fed said and says, no, they're not going to do what they said they're going to do. They're going to do what I think. Well, I don't think anything, so I just assume the Fed's going to do what they're going to do, and they're based on all that information on this idea that energy is already falling, so they're going to do one more even if energy is falling. But I think over the next 2 months, not just August, but September, this is going to start creeping up to being positive, and the Fed will probably have to adjust. and they will adjust that through their summary of economic projections, which comes out September 20th. And the rest of the market will say, oh my God, we were wrong. We got to do something new and whatever. They'll be late, and we'll be ready, willing, and able to ride the wave of the rest of the market's mediocrity catching up to reality. Damn, I'm pissy this morning, huh? Yeah, who? Well, I'm struggling, everybody. I'm sorry, I'm being an asshole. Well, I'm trying my best. I'll be nice. Come on. I'll try my best. So if you get the number, you let me know. Let me know, Pip Star, if you get it. If you get the results, go ahead and post it for everybody. I'm going to throw down an ad so YouTube can make money. Not sure if I'd done that. I need to do that once a day at least. "30 seconds. We had such a great time last night in the day trading group. I wish you would be there. You should join us. I did, a 20-minute speech, maybe a half an hour speech, no, 20 minutes, on trader psychology. And like actually how to tactically have a strategic and tactical trader psychology plan. Yeah. Yeah, it was great. It actually came from an idea that I had for my first book idea. Oh, look at this. Now only 12.5. Energy is going up. It's less negative, guys. Wow, that's cray-cray. So 0.2, shelter up. That's inflationary. Super core up, headline up. Okay, very interesting. So that's it. We already know everything. Good. Yeah, my first book idea came, it was called TLC, Think, Lead, Create. And that was one of the things I was working on in that period of my life. But I even had 3 posters on my wall representing Think, Lead, Create. Okay? So I had a picture of Einstein, a picture of Gandhi, and a picture of Picasso on my wall in my apartment in 1999? Yeah, 1998, 1999. Giant posters of Einstein, Gandhi, and Picasso. Think, Lead, Create. Yeah, and so, anyways, maybe I'll end up doing that book. Wouldn't that be cool? A little late. So like I said, we're going to have a headline up, core up, and super core up. That is not good. And so what you're probably going to start to see is the market pricing in the hike that they haven't priced in. And if it happens again next month, we'll probably see a change in the dot plot of the summary of economic projections. Cool. Cool. Yeah. But let's see how the market's responding. Do I care? Does the market care? Is it good? Well, they're responding favorably here, which is kind of interesting. I guess what? Is that good news? I guess, why is it good news? Are people saying that the number is only 0.2? Yeah, I guess. Whatever. That's kind of interesting. Oh my God. So they're ignoring all the other stuff, right? 4.7 y over y makes sense. So I guess they're saying only 0.2, only 3.2. I guess, yeah, I guess they're saying that's good news, huh? Yeah, all right. Market thinks it's good. Ugh. Good luck, market. Oops, get that out of the way. Yeah, so we went from slightly bearish to now completely, totally flat neutral in market conditions. Do not overly trade. I would find this not bullish, but the market will do what the market wants to do. I don't find it bullish at all. Yeah. So I still think that that's in play. That's how I interpret it. Yeah. In fact, if we update this, okay, because we're not, you have to, I guess you're like, Wayne, you backfitted it. All right, let me put it back to where we had it here. So okay, remember, I just had it like this, and you're like, Wayne, you're changing it to backfill. Okay, I'm not changing the left side. We're just adding the new candlesticks by me dragging the right side of this over. And I'm like, add more candlesticks. Okay, so the red lines show you basically market sentiment from the beginning of the month. Okay, the first few days of the month. And now the blue is what has been happening now that we're 1/3 through the month. And it looks like there's a change, right? And doesn't it seem more bearish? Yeah. And I would probably be leaning on that. Yeah, Meta, right? I guess the classic example is the Cuban government comes out and says, look, things are improving here. Inflation's only up 80%. And you're like, oh my God, that's such great news. India does this, by the way. India does this all the time. India says we're going to increase taxes by 30%. And people are like, what? Increase taxes by 30%. So people hit the streets and they protest, and millions of people have a problem with this. And they're yelling anti-government, saying, boo, boo, boo with the taxes, boo with the taxes. We're going to vote you out. And then the good people of the government come out and say, oh my God, we've heard you. We feel your pain. We understand where you're coming from, and we're listening. So instead of raising taxes 30%, we'll raise them by 15%. And everyone's like, yay! And of course, the government intended that from the beginning. No, don't tell me there's a zero cash new policy in Cuba. Don't say that. No, no, no. Oh my God. What? I'll have to cancel. I don't know if I can cancel. No. Yeah, but everyone's going to still take cash, right? Oh my God, don't say that. So you got to use those little debit card things? I mean, seriously, I drop 10 US dollars on something, people are going to take it. Yeah, so the question is, if I can't use peso, will people take my dollar? Yeah. Dude, no, that sucks. How would that impact me? Let me think. I can get a card. You can't use the peso. No, yeah. Oh, no. No. Well, you know, when I was at the hotel last time, you couldn't use cash at the hotels. Do you know how I handled that? Because I didn't have a card. No, I know what you're saying, the card, right? So, do you know how I handled the no cash rule at the hotel when I didn't have the little debit card? I used cash. So they would come along. They would come along with the. I asked permission first, not the boss. Actually, I asked the boss, and the boss is like, no comment. I'm like, oh, I get it. Wink, wink, nudge, nudge. So then I talked to the waiters, and I'm like, hey, and I pull them aside, really hush, hush. I'm like, hey, and I'm scratching the back of my head. Hey, here's the thing. I don't have the debit card thing. I'm kind of from America. You know what I'm talking about? Hey, can I pay cash? Now, the bartender can just go to the bar, pour his own drinks and all that kind of stuff, and nobody needs to know. The kitchen is a whole different thing. But the bar, the bartender, can, you know, all that kind of stuff. So anyway, so I talked to the waiter. I'm like, hey, I need to pay cash. And they're like, okay. Yeah, that's okay. And I pay cash in a no cash policy. And of course, you give them some love, and they're happy to accommodate. Now, like I said, the hotel, well, you do that credit anyways. The food in the restaurant's a different business, but this time I'm going to have that card. So ultimately, Meta probably doesn't matter because I'll get someone to put, let's say, you know, what, 10,000 pesos, and I'll give them $500. Yeah. Yeah, but I don't want to do that either. I need that card. I'm okay with that card. I'm okay with the card. It would help, in fact. So I'll just do that. All right. So anyways, look at this. Retail getting crushed. I told you, thought it would be bad. I didn't see it as good news. Nice. All right, retail, you got your volatility. Hope you're happy. There's your vol. Uh-huh. Uh-huh. Yeah. So anyways. Well, I'm bringing my elderly father, Maida, to see your beautiful country and meet your beautiful people. And I think that's really cool. And you know, something hit me today. I was listening to Bloomberg radio in the shower as I meditate, which I always do. And they mentioned some songwriter or something. I had never heard of this songwriter, though. But they said he died in his home, surrounded by his family in Los Angeles. And I thought, oh, he probably lived a really nice life. And he's 80. My dad's like 82, turning 83, and we're flying to Cuba. So I keep telling him, make sure you bring your passport. Make sure you bring your passport. If you don't bring your passport, I'm going to leave you in Atlanta. But yeah, so, you know, it's going to be pretty cool anyway, so I'll bring him. I'm super interested, again, in how regular people are getting by. I'm really interested in what changes with high inflation and what doesn't change. So the government getting rid of cash. Okay, look, that's something I can learn from. The government thinks about it like, how do we handle the situation? Well, let's just get rid of cash. Maybe it's easier to handle the money supply or something if there ain't no money. You don't even have to print money anymore. You can just say there's more. I don't know. It's kind of interesting, right? How would you handle inflation in a closed economy? And so you can, again, I'm not there to agree or disagree. There's a real challenge, and people are thinking about it. Whether they're corrupt or not, I'm not being political, I'm being an economist. So I have already met with, and I will be meeting with again, the former head of foreign exchange for the country of Cuba. Worked in the government. He ran that department for 4 or 5 years. And so obviously a government insider, a trained economist, but a socialist economist, not a capitalist economist. So we talked about things, and most of the time we really understood each other when we were like knee deep in the weeds of economics. And then there were other things he's like, oh, I don't know anything about that, like capital markets and stuff. So he had a lot of questions for me, and it was really cool. And so I'm going to go back. I have another meeting with them, and how does a government handle this? And I'm super interested in, like, not that they're communist, and maybe socialist, I care a bit. That's just, again, a difference of opinion. But ultimately, a closed economy, I know very little about. I understand, I've studied closed economies. There's not many left in the world, so this is like a rare opportunity. I don't want to ask why. I almost made the mistake last time of asking questions of like, well, how do you create inflation in a closed economy? And then I realized I'm asking the wrong questions. And I hear Maida's voice, shh, shut your freaking mouth. I'm like, oh, don't ask those questions. But nonetheless, it'll be very interesting. If there is a no cash policy now, I think I can ask about that. I'm like, what do you think about that? Like getting rid of cash. Is that going to be good? Is that going to be bad? What do you think about this? What do you think about that? And if I ask open-ended questions and keep my mouth shut and speak when spoken to, which is very difficult for me, I will have the opportunity to learn. And as they say, God gave me 2 ears and 1 mouth, and if I use them proportionately, I might learn a thing or two. So what an amazing opportunity. Yeah. Yandela says, yeah, 3.3, why are you worrying? Yeah. I've already explained it. I talked for 20 minutes before the news came out why the headline number was going to be good, but the long term is going to be a problem. And that ultimately today's news event is actually irrelevant. So I've covered all that. Everyone that showed up on time is already a genius and above average attractive. Okay, never forget, if you were born ugly, you can become rich, and people, yeah, you can get pretty, right? Anyways, so boom. Well, that's interesting too, right, Maida? Like, what do you do if you've been hoarding cash? Yeah. Well, my guess, Maida, just a random guess with almost no thought put into it. People are going to want dollars even more. I wouldn't be shocked if I get to Cuba and they're like 300. We'll give you 300. It'll go from 100 to 200, now 300, because people are like, wait, what? The money I have saved And from what I can tell, most Cubans have money saved under their mattress, or they actually have a vault, a little safe in the wall. And that money is, yeah, I think they're going to want to, if cash is going to go away, then what do they do with their cash? Golly, is that a problem? Gee whiz. So I want to talk to people and see what, I don't know. Yeah. Well, look at the volatility now. It's coming back the other way. Oh my God, everybody. Oh my God, be so careful. Remember, 6 months ago, I told you right now would be the worst trading conditions of the year. Just keep all this in mind. All right, I can't watch this. It's too painful. Let's look around the world. I've been around the world and okay, where are we? 29,555. Yeah, down 1% for the day, but technically bullish. Did you buy the dip? If you're a bull, that's a buy a dip scenario. You see it? If you're a bull, that's your thing. Okay. That S&P 500, we're stuck at 45,000, my oh my. Gold 1925. Woo. Oil, where we just we're farting around 84. Amazing, huh? What a world, what a life, I'm in love. I got my ring around, my string around my finger. Yeah, watch these commodities, man. Got the vol. Volatility's bad, remember? Yeah, tricky world. Let's take a look at the indices. Did I click the wrong one? Yeah, I did. Gotta get rid of that. I don't have an ECN. Okay, dollar weak, yen weak. That's all risk on, by the way. Money flowing toward Aussie and Euro. Yeah, careful with the Aussie. But yeah, Euro makes sense to me if you were going to be risk on today. Although you know, it's too early. Like, I don't know. You're trading, well, you're trading the volatility. Yeah, yeah. So we'll take like USD CAD's come down. Yeah, like this one. Yeah, yeah, yeah. We're into the sell zone, of course. So you got to be a bit careful on that one. But it's okay. Like the bullish trade plan is take it up to 13 and a half. And we're only at 10 and a half. So there's 300 to the up if you're a bull on this. I'm playing it out here a little more. And you can see we set this one up and it didn't work perfectly, double bottom, but the strategy is still valid. And then we had the higher high. Remember that? A week ago or something, I drew this across and it came down, kicked off the 21 roll reversal. That one worked perfect. And well, it should be a higher high. I would say minimum double top. Playing it out that way. All right. So anyways, there's that. Sorry about that. Obviously, I got distracted there, but I needed to do that. Look at that pig dog. Slam. So I'm looking at this. Bulls have bought at M2. Bears sold at M3. There is no direction here. And QuantBox already has told this. We all know it. I've shown you the 6 measures of opportunity that QuantBox does in real time on 3 different time frames. So there's 18 measures of opportunity. And according to QuantBox, there ain't no opportunity worth your risk. None. Not even a little bit. Yeah. Andela says, don't buy in a bear market. Is that still accurate? You buy higher lows in an uptrend. Richard has losing confidence in the entry level. Did you ask Aiden? How many people get a second opinion from Aiden now? Yep. You can ask, right? You can get feedback on your trades. Hey, welcome to TradePlans.ai, where you can get feedback on your trading idea in less than 3 seconds. You fill out the form, you hit submit, and our trade plans will already be in your email account. In fact, when you open it up, you will see that there's a trade plan for daily, for weekly, and monthly. Yeah, so there you go. Andello says Aiden talks for long term. Daily, weekly, and monthly. Yeah. There you go. So if you consider that long term, well then, good for you. Yeah. Wish you the best of luck. So check it out. It's amazing. I've been around the world. Can't find my baby. So this gets to the moment of truth. If it's going to be a breakout, it has to get back above that line like now. Otherwise, it's definitely bearish. Okay, so let me put that in here, especially for people that are watching the recording. They're like, how do I get to that website, Wayne? http://www.tradeplans.ai, and it's a free service. Coolio. Boy, that's going to be interesting. Let's take a look at the Kiwi. It's right on the sell zone. Oh my God. Yeah, it's critically important what happens here. If it's going to reverse before hitting the bottom, it would do it there, especially on CPI news. I'm just wondering if people wake up and go, no, and then back around. Starting to creep up, huh? Okay, we were here, but let's go back 1 year. Shoot. Come on, Wayne. Just trying to get a year. All right. I'm just wondering, is it giving me to the very end? I think so. Yeah. But today is, what, the 10th, isn't it? Surely it's including today. Oh, there we go. I think it just updated. Okay. So what's the general trend? Well, we're up the 2 weeks in a row, but we're still lower than June. Okay. So yeah, we're up, okay, from a year ago. Okay. But we've been flat since March. There was a spike up and then a spike down and then it creeping up, but we've been averaging 250 going on 6 months or more weekly. And Ella says, why can't I get feedback without posting a trade plan? Dude, you're a funny dude. I can't see how my trade plan is relevant to any decision from AI. Dude, you're a funny dude. It's so funny. Yeah, you're a funny dude. All right. So that's where we are. Oh my God. Yeah. It's just so funny. Yeah. Take a look at some of the yens. Yeah, that yen weakness. Whoa, dude. Look at, here's one we're bullish on, right? Look at the kickoff, that roll reversal, and it's just been running ever since. Yeah, this is one that I'm bullish on. Another one is Euro Yen, so not bullish, not bullish. They're going up, but it doesn't necessarily make me bullish. Euro Yen I'm bullish on, and Swiss Yen I'm bullish on. I guess we're here. And yeah, it's doing its thing. Okay, it's doing its thing. We went down, we hit the support, it dropped and flipped. This is do you guys remember that 121.4 I was talking about? I talked about it right as we were hitting it. And I gave you the origin story. Where's my drawing tool? Epic. It disappears. Okay. I told you that at that time, the origin story for me creating the 121.4. It's not a Fibonacci number. It's not a Fibonacci ratio. It's not in the golden sequence. But it's a Wayne's observation of market, of what I actually saw happen in the marketplace. And look at that flip. And now we're up here. And that just goes back to like, that's what I saw over and over and over and over and over again. And I made a point to recognize 121.4%. Not 0.5, not 0.6, not 0.3, Not 120, not 122.5, not anything random, but something very specific. And just look at that flip. It's kind of interesting. And we talked about it in the time. So if you ever wonder why I have my fib set that way, now you have your own observation. Kind of cool. Cool, man. So here we are. And yeah, whew, kicking off that moving average. What about this time frame? Your trade plan on this one would have gone back to, I can't even read that. 4 hours. What is it? That's probably a swing trade, right? So that's probably what, Friday or Monday's trade, Friday or Sunday, little swing trade. So cool, man, cool beans. Some of this, well, I mean, I wouldn't say this is that this is a seasonal move, but this does have a lot to do with yield curve, doesn't it? Okay. Meanwhile, let's, oops, I didn't mean to do that. Let's go back to here. Let's take a look at the short-term indices again. Dollar was down, now dollar's up. Beautiful volatility, if that's what you want. Okay. So pound dollar is still coming down. That's interesting. We'll go back to euro dollar. Yup, coming down. Here's the Aussie dollar 4 hour. But remember, we're already out of this trade, even though fundamentally it still makes a ton of sense. Yeah, if it flips, we can go all the way back this way. I don't know if it will flip, but the probability of it flipping is pretty high, right? But fundamentally, nothing's changed. So, you know, I'm like, be super careful on that one. Euro dollar, there's your volatility if that's what you were asking for. I told you you'd get it from CPI, but I explained about 6 different reasons why nobody even cares about this CPI. So you're going to get run over by a freight train. Kiwi dollar, nice and weak. Probably one more move around. Okay. USD yen, already got all this done, so it's going up again. Yeah, I know. Pig dog back under the range. Great. Going to commodities. You know, gold just kicked off the 4 hour 21. If that continues, we should hit our target of $1,899.50, which we set up 3 weeks ago. So that would just be happening as we've already planned. WTI coming down, 85 seemed to be the number, from 65 to 75, 75 to 85. So anyways, that's kind of interesting. That's kind of interesting. I'll probably want to buy a dip on that later. And the S&P 500, like I said, well, it'd be interesting if it comes around and we hit our target of, we need to get below 44.44, which is our target from, well, last week. And we should slowly be doing that. So anyways, today is irrelevant. This is one of the worst weeks of the year But we already knew that. And then this news event came out, which most people don't understand, and institutional traders aren't trading. How come institutional traders aren't trading? They don't trade this time of year. They're on vacation. The Fed doesn't even care. Institutional traders don't care. Okay? So it's just us, retail scum. And now some are reactionary and see a bunch of candles changing color and they decide to do something. And there's a whole bunch of us, a whole army that have learned how to trade at Investor Boot Camp and know better, are more informed, have more patience, have more discipline, and with tools like QuantBox, know when to let the winners run, and can now get feedback 24 hours a day, 7 days a week, a second opinion to every trade. Oh my God, what an amazing world. What a life. I'm in love with what we do together. Peace on earth. May the pips be with you. May your profits be above average. Cheers.